Hi Gaurav. Hi Sam. I have few questions for you. Sure, how may I help you? What is accounts payable? In simple terms, accounts payable is money due to supplier for purchase of goods and services on credit. Okay, let me go further. Companies have to buy goods and services for running their businesses, right? Yes. In most cases, companies do not pay suppliers, vendors immediately after the purchase of goods and services. Instead, they get credit from the supplier, which means the supplier allows them to make a payment after a period of time. Okay. So, the purchasing company owes money to the supplier for the date of the purchase till the date the payment is made. Money owed is called liability. This liability for payments due on goods and services is called accounts payable. Okay. Now, what is AP department? Okay. AP department. All business companies have to make payment to outside parties for day-to-day transaction. This is done by accounts payable department in most companies. AP department makes payment to supplier for raw material, supplier for fixed assets, payment to employees of their travel expenses, T&E claims. Accounts payable department description and function. All payment organizations have to make payment to outside parties for day-to-day transaction. The accounts payable department act as a intermediary between the supplier and the department of the company purchasing the goods. This department is authorized to make payments for the goods received or services rendered by the company. There may be some small-sized companies where all the purchase-related transactions are dealt with by one or two persons. Such a company may not need an accounts payable department. However, as such a company grows, it would set up an accounts payable department. AP is broader scope, involves in making payment to suppliers for raw material, supplier for fixed assets, and payments to employees on their travel expense, T&E claims. Beyond the activities carried out in the accounts payable department can be summarized as follows. Matching the invoices with purchase order, good received note, verify the invoice for its authenticity, check for necessary approval in case of non-PO based invoice, processing of invoice into the system, making payment to respective parties on the due date. Thank you Gaurav for sharing this knowledge. I have few more questions on accounts payable. Sure, let's meet again next week. If this video is informative, please hit the like button and share this channel.